you have higher highs and higher lows. Okay. All right. So this is what you are looking at. Okay. In a bullish trend. Okay. It has to be a trending market. You cannot use this strategy in a market that is not trending. First, for example, you can't trade in a market that is consolidating like this. If the price action is like this strategy will not work. All right. It works only in trending markets. That means it has to be either a bullish or bearish market. In this case, this is bullish. That means it's forming, it is breaking structure to the upside. This is a break of structure here. There's a break of structure there. All right. I'm going to change this to black. Okay. There's a break of structure there. There's another break of structure over here to the upside. All right. And there's another one over here to the upside. All right. So it has to be a break of structure to the upside in a bullish trend. Let's say BOS. Okay. So we have a break of structure to the upside here. There's a break of structure there, the break of structure over here. There's another break of structure to the upside over here. Okay. And this is forming, this is a high, okay, and it formed a higher high, and we have, this is a higher price, and we have another higher high over here, another high price over here. Okay. And it has formed a recent high. The most recent high is this one over here. All right. This price over here is the most recent high. So in a bullish trend, you have this, and you have this low price, and you have this higher low which has been formed, and you have this higher low over here. Okay. So what we are anticipating in this kind of formation is another higher low to form. All right, before we can place our trades to the upside. Remember, in a bullish market, you are looking to buy. In an uptrend, you are looking for opportunities to buy at lower time frames. All right, so let's assume this is the formation in an uptrend. Okay, and our current price is just starting to retrace to the downside. Okay, in an uptrend. All right, it's just starting to retrace. So we want to determine how far this price will drop, how low this price will drop before we can place our trades, okay, to buy. All right, so we are waiting for this price to bounce off here at the previous higher high to retest this area before we can buy all the way to the upside. But we don't know at what point that will happen. That is when the Fibonacci retracement tool becomes very handy. Okay, so we take our Fib tool. All right, we take our Fibonacci tool and drag it from the most recent significant low over here, okay, all the way to the most significant recent high over here. Okay, so the most significant recent low is this price over here. Okay, this is the most significant recent low over here, and this is the most significant recent high. Okay, the most significant recent high is over here, this price here. Okay, so you drag your tool from the most significant recent swing low, which is this one. That means price swung all the way here, okay, before going all the way to the upside. All right, so that is a significant swing low here. So we drag our tool, Fibonacci tool, from here, swing low to the swing high. Okay, and we drag it to the right. Okay, so we can see that our golden zone is in between the 50 over here. It's in between the 50% and the 61.8 Fibonacci retracement level here. This is the golden zone where you can actually place your trades. Once this price gets to this point, you watch out for your candlestick patterns. Okay, your candlestick patterns on the lower time frame for entry around this point, especially around this point. Okay, sometimes it can go all the way to the discount area before going upwards, but most likely at the golden zone, it's going to change direction to the upside. This is a discount area. This is a discount zone over here where most traders will be looking to go long or to buy from around here. So this, we are waiting to buy cheap and sell high. All right, so at this point here, when the price gets to this area here, the golden zone area, what you are going to do is watch out for a bullish engulfing candle around here. Okay, something like this. If you have a bullish engulfing candle here, okay, if you have a bullish engulfing candle here, then you are looking for an opportunity to go long, all right, around this zone. So after the bullish engulfing candle closes, or just after the bullish engulfing candle starts, okay, if you see a bullish engulfing candle, obviously you place your buy trade there, okay, you place your buy trade there at the end of the at the close, sorry, or at the open. Okay, sometimes I do it at the open or at the close of the bullish engulfing candle. Place your stop loss just below the discount zone, all right, or below the fib tool, okay, discount zone, and target a 1 to 2 risk to reward ratio, all right, something like that. So this golden zone area is very important between the 50 and the 61.8 fib level, all right. Okay, if you have not yet set your Fibonacci tool, you can take this screenshot and set it the way you can see here. For me, I've set mine to be clear at 161.8, 50%, and at 0. So on the bullish trend, this is the scenario you're looking at. It's pretty simple. This strategy is pretty simple, all right. So this is what you are looking at. So in an uptrend, okay, you look for this kind of trend and wait for your price to retrace all the way to the golden zone, and watch out for the candlestick pattern. When you see a bullish engulfing candlestick pattern around this zone, okay, you place your trade all the way to the upside. Target a 1 to 2 risk to reward ratio. Your stop loss below the discount zone, okay, your stop loss just below the discount zone there, all right, and your take profit over there. You target a 1 to 2 risk to reward ratio over there, all right. So this is how to trade these strategies. Pretty simple. So looking at it on the charts, we can see here an example, all right. So we can see that this is a bullish trend, okay. This is a bullish trend. It's a bullish trend. It's going up, all right. So you can see higher highs and higher lows, all right. Here I've already marked them out, all right. So you drag your fib tool. Let's assume that your price, all this has not happened. All of this has not happened. All of this, okay. All this price action has not yet happened, all right. So your price, your most recent price, is now over here. You have moved all the way to this area here, over here, all right. Okay, so your recent price is over here. When you're over here, you are thinking, how low will this price drop before I can place my buy to the upside? Okay, so what you are looking at is dragging your fib tool, all right. You will drag your fib tool from the most recent significant low, which is this one here. So you drag your tool from here to the most recent significant high, which is this one over here. Let's assume your price is here currently. You drag your tool all the way to that significant swing high and then drag it to the right, okay. So you can see our golden zone is here, over here. Our golden zone is this one, golden zone, okay. That's our golden zone over there, okay, between the 50 and the 61.8%. That's our golden zone, where normally price changes direction to continue with the trend, okay. So when we determine this, that the price may retrace from this, from our current price over here to this zone, when it gets to this zone, we are getting ready to buy, all right. As you can see, if you were to buy from here, place your buy trade here. When you see this bullish engulfing candle, you see this bullish engulfing candle over here, this one, all right. So after seeing this bullish engulfing candle, you would place your trade immediately after seeing this aggressive move to the upside. Place your trade beginning from around there, and place your stop loss just below the discount zone. This would be the discount zone here. This would be the discount zone, okay. This will be the discount zone, all right. Let's use blue. This is our discount zone, all right. And target a 1 to 2 risk to reward ratio, okay, something like this. That would be a 1 to 2 risk to reward ratio. And be patient with your trade. This trade would actually give you profit in the long run, okay. Over here, okay, you can see that if you drag this all the way, you would still win this trade at a 1 to 2 risk to reward ratio. Patience is key in the market. All right. So this would give you a win in this trade. All right. So it is very important, okay, for you to understand this, especially for those who are trading, day traders. This strategy works very well. All right. All right. Even if you're a swing trader, this really works on even higher time frames. So watch out for this candlestick pattern. So we're going to look at also in the opposite direction. If it is a, let's say, if you are looking at selling, okay. So on the flip side, if it's a bearish market, let's say you are moving to the downside, something like this. All right. Something like that. All right. All right. So you are forming, this is a low. This is a low. All right. This is low. This is a lower low. This is a lower low. Another lower low. Another lower low here. This is another lower low. Okay. And price is formed another lower low here, and it's beginning to retrace to the upside. All right. So you have a break of structure here. You have a break of structure here, which has just happened. Okay. I'll color code that black. So you have a break of structure here. Okay. And a break of structure to the downside here. Okay. And you have another break of structure here to the downside. So this is moving downwards. All right. In a downtrend. This has to be in a downtrend. It's forming lower lows and lower highs. This is a lower high. And this is another lower high. And this is another lower high here. So we are anticipating another lower high here for price to return to this area, okay, retest this area before falling all the way to the upside. We are waiting for this kind of movement before we can sell, all right? But we don't know yet because, let's say, our current price is over here, okay? This is where we are right now, okay? And we don't know how high this price will go before it falls, how much we can have, how we can sell on a premium, because we want to sell high and buy low. So we are looking for a premium price here. So we use our Fibonacci tool. We drag our Fibonacci tool from the most significant high, which is this one, to the most significant low, which is this one, okay? This one here. And we drag to the right. Okay, this is our premium. Okay, this is the premium where you have the high price. You are looking at most traders are looking to buy around, to sell around here. This is a premium zone. Okay, it's a premium zone. This is a premium zone. All right, this is a premium zone. All right, this is a premium zone, and this is our golden zone. Okay, this is our golden zone between the 61 and 50, again in between here. Okay, so we are looking to sell at the golden zone area. Okay, so we are waiting for this price to get all to retrace back to the golden zone or the premium area. Okay, but we are looking at the golden zone area before we can sell all the way down. All right, so your Fibonacci tool will help you to mark out the area, the golden zone area, where there is possible reaction to the downside. Okay, so at the golden zone, you wait for this price to get here, okay, to get over here. When it gets here, you are looking for your candlestick patterns to the downside. You are looking for a bearish engulfing around this zone here. You are looking for your bearish engulfing candle around that zone. Okay, you're looking for your bearish engulfing candle there. When you see the bearish engulfing candle here, then you place your trade, okay, You place your sell there, place your stop loss just above the premium, okay, or above significant number of pips above the golden zone, or the safest area is above the premium, okay, just above the premium, and target a 1-to-2 risk reward ratio, okay, something like that, so that when the price gets here, and gives you that confirmation to the downside, you sell, okay, you sell all the way down here, okay. That's how you would trade with this simple strategy. If you are selling, okay, you would sell at towards the premium or golden zone area, mostly the golden zone area. Watch out for the reaction in this area. All right, so this is the most significant swing low, okay. This is the most recent significant swing low, okay. No, this is the most significant swing high over here. This is what I want to demonstrate to you. Most significant swing high, okay. This is the swing high, okay, swing high, okay. That is the swing high where you drag your tool, okay, and this would be the swing low, most recent significant swing low over here. Hold on a second, I want to just mark that out also. This is the swing low, okay. This would be your swing low, okay. So you drag your tool from, in a bearish market, you drag your tool from over here, you drag your Fibonacci tool from the swing high to the swing low, all right, in a bearish market. In a bullish market, you drag it from the swing low to the swing high. So in this case, we dragged it from here to over here, from swing high, okay, to the swing low, all right. So that is very important. This is how you trade in the real market, okay. In a bearish market, just to demonstrate that, in a bearish market, this is what you would see. So we have already determined this is a bearish market. It's going downward. It's forming lower highs. This is lower high over here. All right. This is another lower high. No, lower low. Sorry. No, lower high. Actually, this is a lower high. This is a lower low. Down here are the lower lows. This is the lower low. Okay. Another lower low. Okay. Another lower low. Okay. This is in a bearish market. So in a bearish market, you are looking to sell, right? Okay. So you would look at your Fibonacci tool, you drag it from here. Let's drag it from all the way here to the most recent significant low and drag it to the right. Okay. I'll show you in a second. Hold on. I'll just repeat this for the sake of those who haven't seen. Okay, so this is our most recent significant high. Swing high. Okay, this is our swing high. All right, and this is our swing low. This is our swing low here. Swing low. The most recent, consider the most recent, all right? So our swing low is this one. Our swing high is this price over here. So in a downtrend, we are looking to drag our tool from the swing high, this price over here, to the swing low, this price over here. And then we drag it to the right, like that, all right? So now, let's assume that we were moving downwards and we started to retrace to the upside. We are around this zone, all right? We are around here, and we don't know how high this price is going to retrace before we can place our sell. So we are looking to sell at a higher price, okay? So now we are looking to sell at a higher price here. So now this is So we are waiting for this price to go all the way to our golden zone, all right, before we can sell. Our golden zone, we can already see it here. This is our golden zone. Our golden zone, all right. This is our golden zone here. Okay, this is our premium. Golden zone. This is our golden zone between the 50 and the 61.8. Okay, level, Fibonacci level, and this is our premium zone. Okay, our premium zone. Okay, sometimes the price returns to the premium zone before dropping downwards. Okay, so take note of that. Okay, it doesn't always, it will not always be perfect that it will come to only the golden zone. Sometimes the price will retrace all the way to the premium before dropping down. So this premium is the most discounted price on the up. Okay, it's the highest price where most sellers would be selling at. Okay, all right. So we are waiting for this price to retrace to the golden zone before we can place our sell positions. So this is most likely to happen, like it happened already here in this market. We're just using this as an illustration. So when price gets here, what you are looking at is placing your sales. So you wait for a candlestick formation to the downside. As we can see, this three candlestick formation over here. Okay, we can see this candlestick formation with a long wick on that golden zone rejection. You see these long wicks up here. Okay, you can see these long wicks, this rejection here. So we would place our trade, our sell position, right, to place our stop loss just above the premium zone and target a 1 to 2 risk to reward ratio. Okay, something like that, and this trade would give you a win. All right, so this is how I would use this Fibonacci retracement simple strategy, okay, to place my trades and win most of the time in the market. This has been tested by most traders who are successful, and it has worked for me. I believe it will work for you. Thank you.
Hello guys, thank you very much for watching this video till the end. If you haven't subscribed yet, consider subscribing to this channel and also liking this video, because I'll be bringing such valuable content for you every week on this channel. And also consider clicking that notification bell, all right, so that you are notified whenever I post new content on here. Thank you very much. Until next